Hey, this is Matt Ting from Peak Frameworks, and today we're going to talk about one of the most important decisions that you have to make in your career, which is deciding which industry to specialize in. We're going to specifically be talking about TMT, which is probably the most popular category that people choose in finance, which stands for technology, media, and telecommunications. Now, the industry you pick is actually quite important. It impacts the exit opportunities you have. Some funds will only hire people with a specific industry knowledge. It also impacts the portfolio companies and the companies you look at to invest in, and it also impacts the industry you're learning the most about day in and day out. By the time you reach the mid-level, when you're a VP at an investment bank or a principal at a private equity firm, there is the expectation that you do develop industry knowledge. Unless you're in a product group like M&A or you want to be a capital market specialist, you pretty much need to start understanding a specific industry, get to know the players in the industry, as well as the specific way it's valued or the big industry trends. So in this video, we're going to quickly list the different industry groups, and then we're going to talk specifically about TMT, some of the tailwinds for the industry, and why a lot of top talent typically flocks to this industry. So I'm going to go over this list quickly, but if you're at an investment bank, you're going to have to pick between a number of different industry groups. Now, the most common industry groups at investment banks are as follows: technology, media, and telecom, or TMT, financial institutions, consumer and retail, industrials, healthcare, natural resources, and then real estate. Now, it's done very differently at every single firm, but this generally covers most of the career opportunities you have to some degree. But today we are focusing specifically on TMT, and the reason why I want to talk about it is because over probably the past decade and even beyond that, it's become by far the most popular field to try to work in. Now, I don't have strict data, but virtually in every chapter of my life, whether it was extracurriculars or working in banking or in private equity, everyone wants to work at the TMT funds. And like a sheep, I also followed this trend. I only worked in tech private equity firms as well as doing tech M&A, and I really structured my career around it. Even back in school, I wanted to be on the tech team on the investment club, but I failed and had to cover oil and gas for a year. So I think there's 4 commonly cited reasons why people go into TMT. So let's go through each of these and then validate whether you should do this for your own career. Now, the first thing that often gets said is that TMT often leaves your exit opportunities open. So if you think about some of the popular career opportunities after investment banking, a lot of them do interface quite tightly with TMT. If you want to do venture capital, the easiest sell to a headhunter is if you're already in the TMT or technology team and you look at businesses that have similar structures to what you would ultimately invest in venture capital. The other most popular groups for VC might include healthcare and consumer, as there are specialized focused VC funds in those fields, but it's primarily still a tech-facing industry. Or what if you want to do corporate development? Some of the most acquisitive companies in the world are big tech companies, and a lot of the corporate development jobs in the space are either going to be tech or tech adjacent, so it also makes sense to be TMT. Or if you want to leave the door open to startups or even become a PM, it does make the most sense to do TMT as well. It's just such a large part of the economy at this point that a lot of people feel like they're hedging their careers by specializing it, myself included. And of course, if you want to do a traditional path like private equity or hedge funds, there are probably the most TMT specialized funds, and almost every large fund has to account for tech in some capacity at this point. So I would generally say this is true, especially when you think about how much M&A gets done in the TMT space. It does make sense if you're in investment banking and you want to be in a place like TMT because you'll constantly be doing deals, and generally deals are a good thing for your career early on. Now, the next thing I'd say, which directly builds on these exit opportunities, is that private equity firms love to invest in software. There are some private equity firms like Silver Lake, Thoma Bravo, and Vista Equity that have been some of the most profitable funds over the last generation because of how successfully they've invested in technology. Software is a business model that can really work in private equity. If you're a B2B software business, you have high margins, you have good operating leverage, you have long customer contracts, and these are all things that private equity firms love. The SaaS business model is such a good fit in private equity, and it's so pervasive in the industry that it really pays to understand TMT and how these business models work. Virtually every mega fund and upper middle market firm has to at least look at vertical SaaS businesses if they're investing at their scale. Honestly, when you're recruiting, sometimes it feels like there's more TMT spots at private equity firms than there are in investment banks, and I think that just speaks to how the industry as a whole has shifted. Now, another huge contributor to TMT's popularity is that tech stocks in general have outpaced the broader industry over the course of the last decade. The economy now is so dependent on these big tech companies that if you are at a large hedge fund, you need to analyze these companies to make investments. There isn't an infinite amount of businesses that you can invest in if you're working at a large cap fund. Since the end of 2007, the Nasdaq 100, which looks at the 100 largest tech stocks, has essentially more than doubled the pace of the S&P 500, which represents the broader market. More specifically, Nasdaq 100's total return is over 2.5 times that of the S&P 500. So much growth in the economy is coming from these Nasdaq businesses, and that's why TMT is also popular amongst hedge funds. And the last thing, which perhaps is the most intuitive, is that a lot of these tech businesses are consumer facing and their products are highly accessible. If you are a Gen Z or millennial, you probably have a working understanding of how Facebook or Snapchat works, but it's difficult to intuitively understand how a healthcare service provider might make money. So I think a lot of us just have a lot more intuition and familiarity with these tech products because we use them on a daily basis. There's some industries like natural resources or real estate that have such intense amounts of information that you need to learn to understand them properly. I'm not even sure if I can name more than 5 natural resource companies on the S&P 500 at this point. But it's much more easy to have an opinion on something like Amazon or Uber when you use it all the time. I think generally most of us are attracted to B2C businesses at the outset because they're easy to understand and just much more intuitive to work with. So in closing, I do think it makes a ton of sense why TMT is so popular. If you want to deal with products that you understand, and if you want to work at the hedge funds and private equity funds that have been doing the best over the past decade, then it makes sense to want to work in TMT. However, I do think popularity is a double-edged sword. I would say that a lot of these benefits are very true, and that's the reason why I chose it with my career, but a lot of other people understand this too. So there is a lot of competition going for these spots. So I would say, if you're having a very difficult time recruiting, or you're coming from a very unorthodox background, I would actually use this information to your advantage. I would target industries that tend to be less popular, that have very specialized knowledge that people are a little afraid of. It's much easier to stand out if you're a specialist in a field that a lot of people are scared to touch. I was reading an article recently about Steve McLaughlin, the founder of Financial Technology Partners, who essentially was saying how he was able to carve out a niche in these fintech businesses because no one else wanted to understand them. He said how the financial institutions bankers didn't like it because it was small, and the tech bankers didn't like it because the deals were weird. I think we can apply this in our own careers. If you pick a niche that no one else has bothered to know or is just difficult to understand, then you can really make yourself stick out in recruiting as well as the rest of your career. So that's it for this video. If you're interested in learning how to do case studies for private equity, you can check out a course on our website. The course has case studies on software businesses and teaches metrics that you need to know to invest in technology. So thank you for watching, and I will see you in the next one.